Bloomberg Audio Studios. Podcasts, radio, news.
This is the Closing Bell on the Stock Movers Report. The companies making moves at the close of U.S. trading with Carol Massar, Tim Stenovec, Romaine Bostick, and Scarlett Fu.
Looking at the S&P 500, most names in that index, folks, lower today. 378 losing some ground today, Katie. 124 to the upside and one unchanged.
Yeah, super narrow there. Let's take a look at the sector and let's take a look at the circle and see what our friend is saying there. You can see that tech did manage to finish in the green. Actually, as a sector overall, up by about 1%. All eyes on NVIDIA. Communication services, which is pretty much tech in disguise, also rallying strong today. Energy industrials catching a little bit of a bad bid. What didn't do too well, you would guess this would be the case. Real estate down by 2.7%. We saw a big pop in yields as Jerome Powell was speaking, and that certainly hit that sector pretty hard.
All right, real quickly, NVIDIA, got to mention, $5 trillion market cap today. The stock up as much as 5.5% earlier in the day, still finishing with a gain of about 3%. Historic $5 trillion market cap. We know we got a lot of big headlines from the company and its CEO, Jensen, yesterday. Just the AI spend, the AI frenzy. And we know how important this name is certainly to the bull market that we've seen. With a 50% gain this year through yesterday's close, the stock is single-handedly responsible for nearly a fifth of the S&P 500's index, 70% advance this year. So we know it's been really driving the trade. Teradyne, just got to mention, this was definitely a top gainer in the S&P 500, up 20% in today's session. I believe it's a record close. It's a semi-manufacturing company. Third quarter results beat expectations, and it gave an outlook well ahead of analyst consensus. It also named Michelle Turner its chief financial officer effective November 3rd. That stock up 40%. And Caterpillar up 11%, also now performer today.
Is this an AI play now, I'm told? Is Caterpillar an AI play?
No, isn't it nice? We got Alphabet. Let's
All right. Well, speaking of AI, Alphabet earnings are out. EPS coming in. Looks like a pretty big beat. $2.87 a share for the most recent quarter. The street was looking for $2.26. Revenue in the most recent quarter also a beat. $102 billion in change. The street on average was looking for roughly about $99.9 billion. The company also says that it ended the quarter, that Google Cloud, I should say, ended the quarter, get this, guys, $155 billion backlog.
Oof, yeah, certainly raises the stakes, too, for Amazon. A lot of focus on that cloud business. You can see Alphabet shares deciding what to do, moving higher right now. I will say, Tim, that the bar was high for Alphabet specifically. You think about where the stock has gone year to date, up by 45%. But clearly, you can see investors parsing through and deciding what to do.
Yeah, bouncing around a little bit, but firmly higher now, about 3%. Sundar Pichai, the CEO, out saying that the company had a terrific quarter, double-digit growth across every major part of the business, calling out the first ever $100 billion quarter. He also called out Gemini. It now processes 7 billion tokens per minute and alludes to the full stack approach to AI at Google that's delivering strong momentum, shipping at speed, including the global rollout of AI overviews in AI mode in search in record time. Shares now up by about, 4%.
All right, from one hyperscaler to another we go. Let's go to Microsoft, folks, just crossing with its numbers. First quarter intelligence cloud revenue, this is what we care about, $30.9 billion. The estimate on the street was $18 billion. So it looks like it's coming in line. First quarter Azure also important. Another cloud revenue, X currency up 39%. That beats the estimate of a gain of about 37.1%. And first quarter revenue, again, a beat, $77.67 billion. The estimate on the street remained $75.55 billion. And yet we're seeing the stock down about 4% here in the aftermarket. So we'll look for some more color on this one.
Yeah, some of these numbers, while certainly a beat with regards to the average of analyst estimates that were public, it looks like they did come in below some of the whisper estimates that Bloomberg had reported on. But it gets to this idea as well, and we always have to wait with Microsoft to actually get any sort of forward guidance a little bit later. But this idea of exactly what is in the pipeline that they can actually sort of deliver or at least flag to investors that could sort of be a signal here that not just the spend on Microsoft's part, but more importantly, the reciprocity is actually still there.
Yeah, absolutely. Maybe we'll get some more detail about the pipeline when it comes to the earnings call. But you can see, again, those shares holding the after-hours decline of about 4%. And we know it was a big week for Microsoft with that OpenAI restructuring. Microsoft, of course, securing a stake here when it comes to the future, at least through 2032, Tim.
All right, I'm taking a look at Starbucks, ticker SBUX. That company out with earnings as we speak. Fourth quarter China comp sales up 2%. The estimate was for 2.16%. Fourth quarter comp sales up 1%. The beat estimates of just about negative half a percentage point. Fourth quarter net revenue coming in above estimates at $9.6 billion. Fourth quarter adjusted earnings per share coming in shy of estimates at 52 cents. Fourth quarter North America comp sales, they were flat. The estimate was for a decline of half a percentage point. Fourth quarter adjusted operating margin up 9.4%. The estimate was for 10.2%, so that came in below estimates. Starbucks shares up about 1.6% now in the after hours.
All right, so let's get to Meta because we're seeing the stock drop about 3.9% here in the aftermarket. Meta, with the outlook, sees fourth quarter revenue 56 to 59 billion. The estimate on the street is 57.38 billion. Fourth quarter 2025, or fourth quarter revenue. Let me go there because we're red heading that one here at the Bloomberg. Meta seeing fourth quarter revenue 56 to 59 billion, estimate 57.38 billion. Again, the stock down about 5%. Sees fourth quarter total revenue to be in the range, again, of 56.59. I keep rereading the same ones as they come up. Looking at the past quarter, third quarter ad revenue was 50 billion. That's a beat. The street was looking for 48.59 billion. Third quarter EPS, $1.05 versus 6.3 a share. That's year over year. So we'll look for some color on that one. And then just looking at, go ahead, Romaine.
I just also want to point out, too, here, just going through the release here, there does appear to be a pretty large charge that the company took in the most recent quarter. This is a non-cash income tax charge of $15.93 billion. Meta, though, does say this is a one-off event, and I just want to be very precise in the language here, and that they do still see their fourth quarter 2025 tax rate in the range of 12 to 15%, which would be in line with what the street was looking for. But that does appear to be where we're getting some of the reaction. And one of the reasons why you did see a little bit of softness in that bottom line number for the quarter that just was. Let me just dive a little bit deeper into it and try to get you some more details.
Yeah, we'll continue to follow that. But as Romaine said, could explain some of the negative reaction that we're seeing right now. Meta shares now down by more than 7%. I do want to go to this line in the release. We have a lot of focus, of course, when it comes to CapEx. Meta, they expect full year 2025 total expenses to now be in the range of 116 to 118 billion. The prior outlook had been for 114 to 118 billion there. And they also say that our current expectation is that capital expenditures dollar growth will be notably larger in 2026 than in 2025. This has really been the story for a lot of these big seven names, but also for Meta particularly.
Sorry, I do want to go back to that tax issue here with Meta. And this is something that Zuckerberg and his team are going to have to address on the call. They talk about the one big beautiful bill, basically the big budget stimulus that was passed earlier this year. They did say that they expect a significant reduction in their federal cash tax payments for the rest of the year because of that bill. However, they're saying that for the quarter that just passed, they had to recognize a valuation allowance change that basically amounted to a $16 billion charge. Again, they are saying that this is a one-time charge, and then effectively they will revert back to something that actually a little bit less with regards to the effective tax rate for the current quarter, the current fourth quarter that we're in.
Yeah, the company continues on there. Romaine says net income would have increased by 15.93 billion to 18.64 billion compared to the reported net income of $2.71 billion. The company also saying, Mark Zuckerberg specifically saying that leading the industry when it comes to AI glasses, which we know that, and he sees a big opportunity there. A lot of analysts see a big opportunity there. He says if we deliver even a fraction of the opportunity ahead, then the next few years will be the most exciting period in our history.
All right. Well, those are some big words, but let's tear our eyes away from Meta for just a moment and talk about eBay, also reporting earnings. Fourth quarter net revenue, that is seen between $2.83 billion to $2.89 billion. The estimate had been for $2.8 billion. So a bump up of that range. Take a look at shares down almost 9% at this point, though. So certainly some disappointment coming through when it comes to eBay.
Some disappointment as well when it comes to Carvana. Those shares down 10% in the after hours trade with third quarter EPS coming in at $1.03 a share, revenue coming in at $5.65 billion. But here's your guidance. The company says that full year EBITDA will be at least least $2.2 billion. It had previously pretty much guided towards that. It had a range of $2 to $2.2 billion, so maybe potentially trying to nudge slightly above that with regards to expectations. We should point out, though, the company is also saying here with regards to retail unit sales, 155,941. We'll just round up to 156,000 here. Again, that did beat the average of analyst estimates, but there was a whisper number out there that was a little bit higher, maybe partly responsible for why you're seeing the shares down in the after-hours trade.
Yeah, costs and expenses, too, up about 32% year over year. Kurt Wagner, though, on our live blog talking about this net income and how we see this shortage and then attributing it to this one-time tax charge. Definitely a lot of questions on what this is because it does feel like it's come out of nowhere.
Sorry, one quick one. Chipotle crossing the wire right now. Adjusted EPS coming in line with estimates at 29 cents a share. Revenue roughly coming in line with estimates at $3 billion. Comp sales lower than estimated, coming in at 0.3%. The street was looking for a gain of about 1% here. So a little bit light with regards to comp sales growth. Also a little bit light when it comes to operating margin, 15.9%. The street was looking for 16.6.
And while we're here, let's just talk about ServiceNow really quickly. Boosting their full-year subscription revenue forecast, also beating estimates when it comes to the look-back. Subscription revenue now seen between $12.84 billion to $12.85 billion. The previous guide was for $12.78 billion to $12.8 billion. So you can see, of course, a little bit of a boost there to ServiceNow when it comes to that full-year subscription revenue. All
right, so Microsoft down 3.3%. You've got Alphabet up about 3.5%, and you've got Meta down about 5.7%. So those are big ones that we'll keep a watch on as we go into those calls with analysts and investors.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.